Hello, ladies and gentlemen. The Sri Lankan economy has been facing a crisis owing to a serious balance of payments problem. Its foreign exchange reserves are depleting rapidly, and it is becoming increasingly difficult for the country to import essential consumption goods. So, today, I, Amber Priraj, is going to talk about Sri Lanka's economic crisis, and we'll get into the details about it from the point of perspective of the SSB interview. Let's get started. The current Sri Lankan economic crisis is the product of the historical imbalances in the economic structure, the International Monetary Fund's loan-related conditionalities, and the misguided policies of its authoritarian rulers. Now, the question arises that why is Sri Lanka suffering from a crisis? So we will look at the brief background first. When Sri Lanka emerged from a 26-year-long civil war in 2009, its post-war GDP growth was reasonably high at 8 to 9% per annum till 2012. However, its average GDP growth rate almost halved after 2013 as global commodity prices fell, exports slowed down, and imports rose. Sri Lanka's budget deficits were high during the war, and the global financial crisis of 2008 drained its forex reserves, which led to the country borrowing a loan of $2.6 billion from the IMF in 2009. It again approached the IMF in 2016 for another $1.5 billion loan. However, the conditionalities of the IMF further deteriorated Sri Lanka's economic growth. Recent economic shocks. The Easter bomb blasts of April 2019 in churches in Colombo, resulting in 253 casualties, consequently dropped the number of tourists sharply, leading to a decline in foreign exchange reserves. The newly led government by Gotabaya Rajapaksa in 2019 promised lower tax rates and wide-ranging standard operating procedures for farmers during their campaign. The quick implementation of these ill-advised promises further exacerbated the problem. The COVID-19 pandemic in 2020 made the bad situation worse. Exports of tea, rubber, spices, and garments suffered. Tourism arrivals and revenues fell further. Due to a rise in government expenditures, the fiscal deficit exceeded 10% in 2020 to 21, and the debt to GDP ratio rose from 94% in 2019 to 119% in 2021. Sri Lanka's fertilizer ban. In 2021, all fertilizer imports were completely banned, and it was declared that Sri Lanka would become a 100% organic farming nation overnight. This overnight shift to organic fertilizers heavily impacted food production. Consequently, the Sri Lankan president declared an economic emergency to contain rising food prices, a depreciating currency, and rapidly depleting forex reserves. The lack of foreign currency, coupled with the disastrous overnight ban on chemical fertilizers and pesticides, has sent food prices soaring. Inflation is currently over 15%, and it's forecast to average 17.5%, pushing millions of poorer Sri Lankans to the brink. At present, Sri Lanka's total foreign debt stands at $51 billion. So, ladies and gentlemen, this is for the day. I have briefly covered most of the topics under the ongoing Sri Lankan economic crisis, and also I have realized that this video is going to be part 1. The part 2 I'll be releasing soon, in which I'll be talking about how has India assisted Sri Lanka in this crisis and why helping Sri Lanka is in India's interests, followed by what can be the way forward for Sri Lanka. So this is Amber Priraj signing off. Jai Hind, Jai Bharat.